Well, indeed, thank you for staying with us here on KTN Business today. My name is Peter Akaba. On this second part of the show, we want to continue the conversation that we had started, and this time focus on the particular aspect of technology, especially from the perspective that technology plays a critical role in risk mitigation and in security. And I want to bring in Tony Sugden, who's still here with us in studio. Really, Tony, the fact of the matter is that when your organization started 16 years ago, it was a very different operating environment. Mostly analog, mostly about, when you said security, bodyguards, that sort of thing. Today, it's really all about technology. How does that affect what you do?
Well, I think you're absolutely right. When we started 12 years ago, we were very much orientated towards man guards.
Yes.
But what I think is here to stay and will be very, very apparent for us in the future is technology and digitization, both of which will be transformative. But actually, the more important thing to remember with technology is that it's not just a purchase of an item or a piece of equipment. There is a whole holistic approach that needs to be applied, both in terms of the design, the planning, and the implementation, and then beyond that, being able to use it appropriately. Africa actually is a bit of a graveyard for a lot of technology, and what tends to happen is people will without really thinking through the consequences, or perhaps only just coming up with one item, thinking that will be the panacea to the problem, and then they end up discarding it. And so I think it's very important that while we embrace technology and as I say, digitization, it's got to be done in a manner that is ultimately going to give you the effects that you're looking for.
Let's talk about the international scene and the fact that we've seen over the years large global players come into the market, burn their fingers. We saw a huge influx when we started talking about oil and that sort of thing. But as a local player, you, as an individual and as an organization which literally has its roots in the region, it puts you at a significant advantage, because the other people have to parachute in, set up local structures. It costs them money, which is then loaded onto the customer. But you're different.
Well, I think being locally grounded is an advantage.
Yes.
I think there's a great assumption with Africa, Kenya, and other parts in which we operate, that you can't come to Kenya, and be able to operate unless you're involved in corruption, or unless you're involved in fraud or theft, or indeed you won't come here because all of these things exist. By being here, what we're really able to do is to say that these threats are here, and these threats have to be mitigated, and that's where the risk management part of our perspective comes into it. Is that we recognize that those are threats. We recognize that those could be impediments to business.
Yes.
But by mitigating and embracing the solutions around those things, anybody can come and operate in this environment, providing they've got a good business plan of their own. But we can then bolster on and cement the risk mitigation that they need in order to survive.
So how exactly do you then mitigate and plan around the eventuality so that you survive, as you're saying?
Well, I think the most important part is yourself recognizing that that if you assume, for example, that fraud is so pervasive in Africa that it's not worth dealing with, then you're already on the back foot.
Yes.
We believe very much in an ink spot strategy, whereby we can work on particular problems. We see it as it's a threat, but let's address how we can tolerate, or how we're going to move that threat to something else, and by addressing those threats in the context of risk mitigation, then actually you can come up with solutions which are survivable at the end of the day.
We're seeing across the region large opportunities cropping up, either because we're seeing mining starting to happen in a big way. We've seen discoveries of oil, gas, exploitation of those. We're seeing plans for pipelines. This offers huge opportunities for international players. This then translates into huge opportunities for individuals and organizations such as yours. What's the market outlook for the future?
I think that the market outlook for the region is amazing, actually. We can see out of DRC, for example, that mining has become enormous, and in particular there's a product of cobalt, which is now used in batteries, and put aside the fact that there have been some sort of human rights related issues, which I think you may have seen.
Mining,
yeah,
that
exactly.
Sort of thing, yes.
But those markets are immense. I think we're seeing the same thing in Kenya. The price of oil is moving towards an area where it is economically attractive. I think the same thing applies in Uganda. So all of these opportunities are developing, and I think it's the most important thing is for entrepreneurs who want to get into that space, they've got to be prepared to come at it from a standpoint of being entirely ethical, because these organizations will demand that, being rules-based, and ensuring that what they offer is robust enough to ensure that these organizations who have an international reputation to uphold do not themselves then get hurt by your actions.
Let's talk finally about sustainable business. The fact that for a lot of Africa, we have normalized practices that usually wouldn't happen in other parts of the world. And for a lot of organizations without that local knowledge, you then get trapped in some of these holes. Like we've seen the Chinese often start to burn their fingers in various areas. Is a player like you able to come in and say, we can plug in and help you start to sort these things that keep cropping up? Are you able to literally work across the divided event for organizations such as the Chinese that we're seeing all over the place?
Absolutely, yes, absolutely. I mean, again, it's a relational approach that we need to have, and providing they have a common understanding about where we need to be, then those capabilities can be very very well applied to any organization that comes here that wants to succeed. And in a lot of cases, I think one of the things about Africa which perhaps is a bit of an issue is that sometimes particularly local organizations will tend to have a business plan or an idea that doesn't have enough economic profit associated with it. And so what they then do is that they try and cut corners in order to get enough economic profit. And what that ultimately leads to is that your reputation starts to suffer, and your relationship with these international organizations will then become sticky.
Finally, government relations and the fact that often in many places, government, the ruling class is often the problem. Especially for when it comes to politics, instability, that sort of thing. Are you able to bring in the aspect of either advocacy, opening doors, enabling people be able to literally balance? For example, if you're an investor in Kenya 12 months ago and you didn't know which way it would go, then if you sided with one side and it went the other way, you literally have burnt your fingers. Are you able to advise on things like that?
Well, I think we, although the political sphere is not an area that we routinely operate, but what we do see is we see how the political environment can have a massive impact on how people operate. We've seen that in South Sudan, which has been a perennial problem. We saw that in Kenya. So again, I think through our security information services, through our desire to ensure that people are appropriately advised, we can help to lay out the roadmap, if you like, to ensure that you don't end up betting on the wrong option.
Okay, indeed. Thank you very much, Tony Sugden from Insight. Thank you very much for your time.
Thank you very much, Peter.
It has been a very insightful conversation, and we hope to have you back in the near future. Thank you.
Thank you. Thanks very much.
Well, on that informative note, we bring that to an end, but still have a few more stories coming your way. This time we turn to the British economy. Where British scientists have developed a far more accurate blood test to diagnose peanut allergy, offering a better way to monitor a significant food hazard. Now, peanuts are the most common cause of fatal food-induced anaphylaxis or severe allergenic reaction, and allergy cases among children have risen sharply in recent years. Now, Britain's Food Standards Agency estimates that up to 1 in 55 children have a peanut allergy, in contrast to existing skin prick or other blood tests that produce a large number of false positive results. The new diagnostic has 98% specificity.
Marker as they react that we can measure by flow cytometry and show these markers on the surface. There were a couple of patients that unexpectedly reacted with quite severe reactions, which is what can happen. We have to be prepared to treat any type of allergic reactions in any challenges. But again, show me that we really need to find better ways. We need to find better tests to diagnose food allergies. Current allergy tests, if we test random children in the general population, about 1 in 5 with a positive test would actually be allergic if we challenge them. Okay, in these tests, it would be essentially if they have a positive test, they will be all virtually allergic. So only 98% of children with a positive test would be allergic. So this is how much more specific it is.
Well, I am allergic not to just peanuts, but pulses, and I can tell you that breakthrough, very important right there. Now, the International Monetary Fund is warning that sub-Saharan African nations are at risk of debt distress because of heavy borrowing and gaping deficits. This despite an overall uptick in economic growth. The sober assessment comes as African nations continue to tap international debt markets and issue record levels of debt in foreign currency, spurred on by an insatiable investor demand for yields. Its economic outlook for the region released in Accra, Ghana on Tuesday. The fund projected the rate of economic expansion would rise to 3.4% this year, up from 2.8% in 2017, boosted by global growth and higher commodity prices.
What we're concerned about is really the pace of increase rather than the level of debt on average. But what is worrisome is that in countries, particularly oil exporters, other natural commodity exporters, what we've seen is a pronounced increase in debt in the last couple of years. And there, of course, it reflects the big hit to their economies following the commodity price crash, the hits to revenue levels, the hits to their economies. Much the rest of the region, the increase has been more modest, but still, it's on an increasing trend. And it reflects in most cases, basically countries being very aggressive in trying to address their development objectives, investment in infrastructure, in health, in education. So what we're calling for right now is, in those countries where debt has been gone up very aggressively, there's going to be need for significant fiscal consolidation. And in the other countries where the level of debt has been increasing more modestly, there it's about trying to find the right balance between investment and avoiding debt sustainability issues. Fundamentally, over the medium term, what you want to do is make sure that the lion's share of your financing objective is addressed through revenue mobilization. And that indeed is, a lot of the work that we do with countries, how to be able to generate between 0.5 and 1 percentage point of GDP a year increase in revenues. So that is really ultimately how you want to be able to finance your development spending needs. However, temporarily, of course, financing, borrowing to finance, spending is part of the macroeconomic policy toolkit which all countries use. And within reason, that is also an appropriate objective.
Now, Australia has announced plans in its annual budget on Tuesday to spend nearly $224 million to upgrade airport security amid heightened fears of lone wolf terror attacks. Now, Australia's staunch ally of the United States has been on high alert for several years now for attacks by homegrown militants returning from fighting in the Middle East or their supporters. It has also foiled several planned attacks by radicalized locals, most notably in July 2017 when it arrested and charged several men who attempted to smuggle an explosive device onto a plane departing Sydney Airport.
In this budget, we are taking further action, directly investing to harden up security at our airports, $50 million to upgrade security infrastructure at 64 regional airports, $122 million to enhance screening capability for inbound air cargo and international mail, $122 million to increase police and border force presence and capability at 9 major domestic and international airports. Higher taxes to chase higher spending never ends well. Australians always end up paying for it one way or another. We have reached the turning point on debt. Net debt will now peak at 18.6% of GDP this year in 2017-18 and will fall by around $30 billion over the forward estimates. Over the medium term, net debt will fall to 3.8% of GDP by 2028-29, more than $230 billion.
About 3 minutes left here. Well, we're now starting to wind down the show, but just before we go to recap our top stories, where Safaricom has announced Wednesday that its profit for the year ended March 2018 grew to 55.3 billion shillings compared to 48.4 billion shillings for the year before on the back of M-Pesa and data revenue growth. Now, this represents a 14.3% growth of its full year after-tax earnings. M-Pesa revenue grew 14.2% to 62.9 billion shillings, while mobile data was up 24% to 36.4 billion over the period. The chief executive of Kenya's largest telecommunications firm, Bob Collymore, also announced that he would be making a return to the helm of the company. In a video message that was shared to staff and shareholders, he said that he's awaiting medical clearance to travel back into the country. And staying with that story now, while speaking to investors while presenting the results Wednesday morning, Safaricom Chief Finance Officer or CFO Satish Kamath said that the board had recommended a dividend payout of some 44.1 billion shillings. This is an increase of 13.5% of the previous year. Take a look.
Starting with drought at the beginning of the year, which impacted the prices of unga, which impacted in turn the consumer wallet significantly, further accentuated with the situation with credit growth being one of the lowest in 14 years, with the interest rate cap bill causing some hardships in the SME segment, the uncertain regulatory environment, prolonged elections, all of which came together in the same year.
There was a slight drop in our market share. Now, we have never spoken about that, but the position is as follows, because when you have people making it difficult for our dealers and for our agents to work, that is really not acceptable. We'd really want that politics be away from business.
Well, that followed from the political period that is being alluded there by Joseph Ogutu, Strategy Director at Safaricom, is exactly what our conversation with Tony Sugden was about earlier on in the show. Well, just before we go, a quick look at the market once again to bring you up to speed on what exactly the numbers have been. The money markets, the dollar pegged at 100 shillings flat, 0.36, 156 buying and selling levels, while the pound buying 135.55, 135.85 buying and selling levels respectively, while the euro was traded for 118.97 buying and 119.24 selling. Well, a quick look at the market itself. This is the NSE performance. Turnover, 668 million shillings worth of shares bought and sold. Shares traded at 31 million individual counters. The NSE 20 share index pegged at 3658.91, while bond turnover was pegged at 2.5 billion shillings. Now, to, of course, the counters that have been driving this trade: Britam, Safaricom, Barclays Bank of Kenya, and Kenal Cobble. Now, Britam having moved 41.12 million shares, Safaricom 15.7 million shares, Barclays 7.60 million, and Kenal Cobble 3.28 million shares bought and sold. Well, the bears and the bulls of that trading session coming right up. Now, winning stocks of the day: Mumias Sugar, Total, Serena and Williamson Tea. Now, Total having trended upward 6.87% to top the winning stocks, while Mumias Sugar was up 6.25%. Let's take a brief look at the losers of the day now. East Africa Portland Cement, Crown Baja, Flame Tree and Kenya Re. East Africa Portland, they are leading the pack, 9.71%, down to 23 shillings and 35 cents. Well, it's a wrap for us here today on KTN Business Today for this edition, but of course we'll be back tomorrow at the same time with more from the world of business. Coming up in just a few minutes is the Swahili news from KTN. This, of course, will be coming up in just a few minutes. We'll be back at the same time tomorrow with more from the world of business. My name is Peter Akaba. It has been a pleasure.